Actually, I guess it's probably good evening to most of you. Wanted to just kind of continue on a little bit with the video from earlier today, talking about the federal or the Treasury and the government is on an unsustainable debt issuance path, and the Federal Reserve is warning about this. Now, I think this is an incredibly like important topic to not only understand, to really wrap your head around, but to internalize in a way that then gives us the better strategy than people who are saying like the Fed has lost control, they don't know what they're doing, all that other stuff. We hear that quite a bit out there in the mainstream media, but then when we look into some of the documents, some of the speeches, and some of the things that are being said by the Federal Reserve itself, we can find that this is really not the case, and that there is definitely, a well orchestrated plan that is taking place right now. But before I dive too much into information and stuff like that, I really wanted to share with you guys a mail call because I stopped by the post office and picked up some mail, and somebody was cool enough to draw up this little handmade postcard. Isn't that cool? Let me get it out of the sun there. Isn't that neat? That was pretty cool of them. Yeah, they got the dice there and got me all up in the hoodie and stuff. All right. It says, hello. Hope you're having a great day. Here is a homemade postcard. Also was wondering if you can add chapters to the long live videos after going live. Sometimes they are several hours long and can't watch on weekdays because I work. My time is limited, but regardless, love the videos. Texas viewer. Thank you so much, Texas viewer. I really appreciate the postcard and you taking the time to sketch that out. That is really cool of you. Thank you. Um, yeah, people have asked me to cut more shorts, to cut videos, stuff like that. I'm working on that. I'm trying not to occupy more time with YouTube. I'm trying to trying to limit my time on YouTube. Coming out here and doing live streams and stuff like that takes quite a bit of time, but coming out here and doing the live streams is really a straightforward, do the video, get it uploaded, and go back to what I was doing. If I was to go and start cutting and editing and doing a bunch of stuff, I start taking time away from some of the other things that I was doing, like, spending time with family, and I become obligated to get those things done. So these are just excuses. Total excuses, right? It's not something that I couldn't do or shouldn't do. But as far as this right now, those are probably some of the reasons why I'm not active on other platforms and other stuff like that. All right, so, and got another one here. This is a kind of a big package here. I'm kind of interested to see what's inside of this one here. What's this? Huh. Okay. Give me a second here, guys. I don't know if this is something that... What in the world? Okay. So, okay, so give me just a second here, guys. I don't mean to for a big pause in here, but there's a money order in here for $12. Right? So, this individual, and I'm gonna. I'm sorry, guys, for the pause inside of here. I just wanted to read this to see if it was going to be something that would be acceptable to go out there on live, because that's not really something I don't know if I should quite get out there. But ultimately, I believe it says here, please find the enclosed $12 to join the UE channel. I do not shop online, do multiple thefts and online stuff. So I guess what they're wanting is for me to take the money and then sign them up, maybe give them a gift of the channel membership. That's it's putting in kind of a lot of pressure on me. Like, what if all of a sudden there's tons of people start doing that? They would, make me obligated to, like, then start making sure I manage that, all this stuff ends up being like, they get their channel, and if they don't get it, they're going to be upset and asking me for money back and stuff. I mean, I find this to be a little bit weird, so I'm just going to hold on to that because maybe I'm just kind of missing some of that, but I really appreciate the idea that's coming from that, and I certainly appreciate this postcard. I really think that's cool, right? Again, I'll hold that out there. All right, so we'll set that aside for just a little bit here, and we'll talk about what's going on within the Federal Reserve statement in the unsustainable debt path. Now, this is something that, like, the Federal Reserve has been talking about for quite some time. It's not like new. It's not like all of a sudden hitting them a surprise. I mean, this is something that Ben Bernanke was saying, like, I don't know, 5 years ago or something. Not Ben Bernanke, but Jerome Powell was saying, like, years ago when he first was chairman of the Federal Reserve. He was saying that the United States was on an unsustainable debt path. Everybody knows this. This is not like news, right? However, what is it that's going to be done? Because when it comes to the Federal Reserve and the demand, this is, I think, where, like, a lot of times when I start to speak, people say, "Dude, you talk over a lot of people's heads," and I don't realize I have done that. Like, I've dived so hard into this stuff. I've looked at so many things now that I realized that, yeah, I do kind of speak with, like, this, Fed speak kind of thing, but it makes a lot of sense when you do understand it from their language, right? And so this is really where I try to break things down for people to understand it in a fashion, like, if you have no clue about what's going on, to better understand it. And when it comes to, like, when it comes to what the Federal Reserve was set up to do, it's not what a lot of people think is what it was, right? Now, there's a lot of people out there who can find a lot of blame and excuses and stuff like that, and you will find where they will set up to steal the wealth from everybody and force you into slavery. Okay. Yeah, you can kind of go through the information and dig that out and retain it in that fashion. Or you can look at it for what was really taking place, and that there was booms and bust cycles taking place within this nation that were quite devastating. And guys like JP Morgan, the man, was tired of bailing this nation out. He was just like, we got to do something about this, right? This boom and bust cycles that are just absolutely destroying people when they go through these business cycles we got to figure this out. We got to have something that can smooth this out. And the idea of the Federal Reserve, now I'm not giving excuses to this, I'm just trying to give you the reasons that it was truly set up. Now, the idea behind the Federal Reserve was that it was going to be an elastic money supply. All right? By having the central bank with the fiat currency, they would be able to, during times of economic expansion, to be able to add currency to the economy. See, now by adding this currency to the economy, what they were doing was trying to prevent the booms and bust cycles that would typically take place from, like, what we have learned from Cantillon, is that there would be a hoarding of the money by the most industrious people. And by that money getting hoarded, it deprives everybody else from doing transactions, from doing business. So during the good times, as money's flowing through the system, everybody's really happy about that. Businesses grow, right? The most industrious people began to produce and save. They save money, and then that deprives the rest of the people out there from being able to do transactions. And then eventually you see economics slow down, and then that money is redistributed out, and then the whole thing starts over again. And again, this is like the cycle, the business cycle that happens. In order to prevent this from outcome, right, this sort of thing from happening, they said during the economic expansions, we will add money to the system to make sure that everybody has plenty of money around there, right? Because as the economy is heating up and more people are active and there's more transactions taking place, there's a need for more money. But then Quite the opposite. As things slow down, what ends up happening, right? Less economic transactions, there would be less need for money. The Federal Reserve would pull the money back out. This is how they were essentially established. Right? This is what they were an elastic money supply operation. However, that's not the case today, is it? Like during down times and the economy is slowing down, they go into money printing and expand the economy. And now this is quite different from what it was that they were set up to do. So now people look at him and say, this is what the Federal Reserve is set up to do. But it wasn't. That's not what they were set up to do. This is what they're doing. That's true. But what they were set up to do was something very different from that. It slowly morphed into what we are experiencing today. So it's better to understand it for what it was, what was going on back there, because then it makes sense to why it was established. Now, granted, this gave the ability for some people out there to take advantage of this situation and do exactly what ended up taking place in creating an inequality for so many because of the way that new money comes into the system. See, if you didn't have the bust cycle, then you will have ever increasing separation. So you need the bust in order for there to be a redistribution of all the wealth. But we never go through a true bust. See, the bust that we do go through, see, they're socialistic in nature when you think about it, because, see, we have to bail out the system. Too big to fail is a socialistic game, right? That is, you're a corporation that's too big to fail. That doesn't make any sense in a capitalistic system. There is no such thing as too big to fail, right? And so having this game where we could say, oh, hey, we got capitalism that's working, that's in this game, that's causing all these issues and booms and busts and all the other, but that doesn't really actually exist. And it's not really a socialistic game either. So this is a very well orchestrated, fun little manipulated, awesome system of central banking, adding fiat currency to the system, manipulating interest rates, trying to deal with business cycles. And in the meantime, people are growing incredibly rich off of this. And the reason that they're growing incredibly rich off of it is because anytime you ever have new money coming into the system, you are going to have a separation between the rich and the poor. See, if you don't go through the bust, if you don't go through the bust cycles, then you will never have a redistribution. Too big to fail means you didn't bust. It means some people get to go ahead and fail while a certain select group get to succeed. And that doesn't work in a capitalistic system when everybody should have an opportunity to fail equally. Right? The same equal opportunity to fail. But when you don't have that opportunity, then you don't get the failure, then you don't have that going on. So now what you end up with is a system that has ever increasing expansion of money supply. However, the way the money comes into the new money supply comes into the system is not just a matter of just printing up money. It's just like, I'll hear a lot of people, it's just like, oh, they'll just print it. And it was just like, okay, yeah, all right. Well, even better yet, they'll just digitally enter it, right? And that's all there is. Simple as that. Wash your hands of it. Don't need to know anything more about it. That's how it's done. And now, I don't fall for that just so simply, right? Because there's actually a process to which this is done. And the Federal Reserve, simply to understand it, has to buy something. Yeah, they do print up. It's just digitals, it's the fiat currency, all that other stuff. But what that is a liability. The Federal Reserve has a balance sheet, just like anything else. Every corporation, just like you have a balance sheet too. You have assets and liabilities. Most people, I mean, a lot of people out there have a hell of a lot more liabilities than they have assets. But the Federal Reserve, the government, the Treasury, everybody is exactly the same, right? Everybody has assets and liabilities, and the Federal Reserve is no different. Now, the Federal Reserve's liabilities is all the money, all the cash, all the digital entries, all that stuff is the Federal Reserve's liabilities. Their asset is all the things that they purchase. They purchase treasuries. They purchase mortgage-backed securities. They have special drawing rights. Special drawing rights is a basket of currencies from around the world, of the top nations out there, the top economic nations. They buy these SDRs. They have those on their balance sheet. They have gold. They have mortgage-backed securities. They got treasuries. They got some stuff on their balance sheet, but they can't just print up money and just like throw it out the window. It doesn't work like that. They have to have something to buy. And the majority of it are U.S. treasuries, like vast majority of it. So when they have a balance sheet that is pretty much has the majority of the entire balance sheet on their asset side is sitting in treasuries, it very little else makes a big difference, right? Like, sure, yeah, mortgage-backed securities, that's a huge thing on side of it. Same thing with gold and SDRs, right? But nothing, it's all pales in comparison when it comes to what it is that the Treasury holds on their balance sheet. It is an insane amount. And so now when you think about it, all the liabilities that are existing out there, they're essentially being backed by U.S. treasuries, right? Because the bank has a balance sheet, right? Assets and liabilities. The liabilities are all the dollars, and the assets are all the things that are sitting on that balance sheet, like the U.S. treasuries, the mortgage-backed securities, the SDRs, the gold, right? There's a little bit of gold there. Not nearly enough, right, to back anything, but, you know, there is some there. And so now, when we think about this unsustainable debt path that the Federal Reserve is warning that the government is on, they facilitated it. Like, they made it happen. Like, otherwise the government would have to sell those treasuries out there to the market, and the market would find their price, right? So now, if couple of things. If they went into this much debt and they had to sell that to the market without the Federal Reserve's participation, there would be so much of it out there, the price of them would be very low and the interest rates, the yields on them would be very high. This is very difficult for a lot of people to understand, price versus yield and how this works in the bonds, and this is like where everybody begins to lose it. But this is important to understand because that balance sheet adjust off the prices of what those treasuries are. So if you don't understand how the treasury is operating, then you will totally miss what it is that the Federal Reserve is warning the government about, because they're sitting on mainly U.S. treasuries and they're like, you know, guys, this is not looking good for us, and we have a ton of liabilities out there that we would like back. And if these assets begin to fall because you're on an unsustainable debt path, and you create a defaulting moment or one of major concern, the value of these assets begins to fall dramatically. And now, just as much as everybody goes, whatever, it's a big deal, right? Just like everybody's balance sheet is a big deal. So now the Federal Reserve is seeing this. They saw it a long time ago, and they're warning about it. They've been warning about it. But yet now here we are sitting in a position is like, so what are we going to do? The world demands liabilities from the Federal Reserve, the dollars, those Federal Reserve notes, the digital entries, whatever you want to think about it as. The world is in demand of these things. Why? Because they want to do transactions. Everybody wants to work. And now there is, as much as you want to see the BRICS nations go on the rise, that is fine, that is cool. They are doing it. Granted, there is actions happening, people are taking place with it. Here's the problem. There is not nearly enough currency out there being provided by the BRICS nations or any other nation to do what it is that the dollar is doing. And the reason why the dollar is doing what it's doing is because of the sheer amount of debt that the United States government has gone into in order for the Federal Reserve to issue out the liability so that they could have the asset on their balance sheet. This is really how it's going down. I know this is difficult for a lot of people to understand, right? I know it's like in to try and wrap your head around it in just a single video is almost like it's impossible. Like, you know, a lot of people are still stuck on the whole idea of how does the bond yields work, right? So the Federal Reserve is going to be moving into a situation going into the future where they're not going to be wanting to push the United States deeper into debt by facilitating the trade. The United States is going to have to go out there into the world and find buyers of their debt if they want to continue to go deeper into debt. And there's not going to be a lot of people out there willing to buy their debt. So they're going to have to either cut government or charge more in taxes. Which one is it going to be? Neither one of those are very politically, like, going to be like politically fun to experience, right? I mean, I don't even know how to quite describe it, because I just don't even imagine like how it is that can be communicated to the people out there in a way that they would be accepting of it. Like, it ain't happening, like I can't even, it's hard for me to even like, conceptualize it, because the idea of cutting government and cutting taxes at the same time to the people who have become so accustomed to the lives and entitlements that they have, there's no way that that's going to go over in any kind of fashion that would be accepted. So it's just not going to take place. What is it the Federal Reserve is going to do? They need to keep issuing out their liabilities. They need to figure out a way that they can continue to issue out those liabilities to meet the world's demand for them. And the main asset that they put on their balance sheet is completely unsustainable debt path. They know this, they've warned about it, and they've said it many times. And so when I think about what it is that could possibly come, like, how is it that they're going to do this? Like, I mean, some people just here, actually, I was going to write down a bunch of these, but this was one of them. Craig Colburn, 8351. Thank you so much for watching the channel and being part of this. He said, and I cut this a little short, he says, they will continue to print currency, forcing the globe to use the dollar via war. Okay, I can see that, right? I can see them, forcing everybody into war. But why would they be forced into the dollar? I mean, there's wars going on now. They can use the BRICS nations. Go ahead and fight wars. Don't they seem to want to be getting out of it? Well, I could see this as actually a very logical statement, because really, if you can get the people out there in the globe so panicked about the outcome of the future that they have no other choice but to run to the safe haven of the U.S. Treasury. See, this is really what ends up happening when you have major global concern, is that there is a flight to safety. And if you could create a world war effort to scare the hell out of everybody, then you might find where you have plenty of buyers of U.S. Treasuries out there, and it doesn't have to be the Federal Reserve. At the same time, the Federal Reserve can be facilitating the purchasing of foreign debt. Now, something I thought very interesting about this is that a lot of people have never even heard of this concept, that the Federal Reserve can actually put on their balance sheet not U.S. Treasuries, the debt of the U.S. government, but put the debt of a foreign nation out there. Like taking the debt of Canada, taking the debt of, England, taking the debt of whatever nation, France, and putting that on their balance sheet and issuing out liabilities, dollars. Now, the moment, like I know just from the things that I have learned that this is going to be something that is going to be so dramatic to the markets. They are going to lose their minds. Most people never even heard of this idea. But yet this is something that Ben Bernanke said that they could use to try and create liquidity out there, to try and provide the world with liquidity, the dollars. Once they figured out that the United States is not capable of being able to provide them with that asset, that they're going to have to figure out another asset. This is what's going to happen after the quantitative easing doesn't work anymore. which I'm sure we've come to the end of the usefulness. I'm not saying that it's not going to be used, but the usefulness in a dramatic fashion like quantitative easing has been, I think that's going to come to an end, and they're going to have to come into something that's even bigger than quantitative easing of U.S. Treasuries. They're going to go into quantitative easing of world government debt, like the governments around the world buying into that debt. And the moment that that happens and the markets see that, what do you think is going to happen? People are going to look at that and say, man, the Federal Reserve is going to be a buyer of this. I'm in, right? Because now they got a buyer of it. That brings in the willing market participants. Now, all of a sudden, people are going to be willing to hold this foreign debt on their balance sheets, on their portfolios, knowing that they can offload them to the Federal Reserve. It's going to create market liquidity within these things. You see what's happening here? Like, you want to funnel money to this particular nation, all you have to do is to say you're going to buy their debt, and the market will run out there and buy it all up, trying to sell it to them. See, this is what happens when the Federal Reserve talks about what it is that they are going to be doing. The markets try to front run them, try to take care of business before they have a chance to. We saw it happen clearly within the special purpose vehicles in the corporate debt lending facility. Right? So I know that these guys are not going to just allow it to just fail. Like, they don't have a plan. Like, hey, we warned you, that was that. We've said it so many times. Too bad. Well, sucks to be you, right? They ain't gonna say it. It doesn't go down like that. Like, it doesn't go down like that. I don't know anybody who seems to want to convince you that it's going to go down like that is not. It's not going to go. It's not, right? There's 150 top economists at the Federal Reserve who think about this stuff all the time, and they actually talk about it in their speeches. It's broken apart into so many different parts and pieces that if you don't put it together like a puzzle, you'll never see it, right? If you don't obsess over it like I have, or follow this channel on just about every video that I put out, if I didn't put out the videos themselves, just trying to document some of the things that I have found, then there was no way that I would have been able to piece it together. There's just too much stuff, right? But once you have pieced it together, once you see the real story behind it all, it's not the media propaganda, which is part of the monetary policy, which is, it has to be followed, right? If you really want to understand monetary policy, you have to look at the mainstream media propaganda in order to see the communications that are taking place, and then you have to then view it from the statements that are coming from the Federal Reserve itself through their speeches that are given to the other central bankers out there. There is two communications taking place at the exact same time, right? And the language that they use is very similar, right? It's very similar, and then it gets very confusing because then these people will come out and reiterate some of the things that they had said, but they say it in such a way that it reinforces the misunderstanding of what it is that they are planning and what they are doing and what the policy is in order for them to conduct that policy. It's the craziest thing to finally wrap your head around. And I know most people think I'm loony when I talk like this, but once you see it, you get it. It's like it's so clearly spoken. I mean, here's the thing about it, is that if they did not set it up to do what it is that they are doing today, starting years ago, right, then they would never be able to pull off some of the things that they are doing. Like, they had to start this thing literally 15, 20 years ago, right? Talking about the communications, the style of communications, like, you have to think there was a time when the Federal Reserve wouldn't communicate at all. They would literally come out with monetary adjustments on a surprise. Like, all of a sudden one day you'd wake up and they had moved and they were like, oh yeah, hey, by the way, we just adjusted monetary policy. Now they talk about it so much, nobody has any idea what the hell monetary policy is going to be going into the future. They're looking at rate cuts, possible rate cuts, 2 rate cuts, 1 rate cut, don't rate cuts, rate hikes. Like, nobody has any clue of what's going on into the future because most people have no idea of what it is that the monetary policy is really supposed to be. Right? The Federal Reserve is not going for a 2% target, but yet try to convince that out of anybody out there within the mainstream media. Try to convince that of anybody who even like remotely follows the media or follows the economy. It's not a 2% target. It's a 2% average inflation rate over time. And the Federal Reserve's appropriate monetary policy is seeking to achieve inflation that is moderately above 2% for some time. Nobody talks like that. So everybody has missed it. Nobody knows exactly, or everybody seems to know exactly how the Federal Reserve screwed up, but nobody knows anything about the monetary policy and how it is that they are truly trying to conduct themselves to achieve this long-term inflation goal of 2% with no mathematical formula to figure it out, which is even better. Right? See, the Fed knows this. This is simply, let's break it down this way. Right? Let's think about it like this. The Fed knows that if they do not provide the world with the demand, with their fulfill their demand for their liability, right, the cash, the dollar will grow incredibly strong. This strengthening of the dollar will absolutely destroy whatever little manufacturing that we have as far as exports that take place here in the United States. The separation between the rich and the poor will grow even worse. And even worse than that is that a lot of people will start to fail because there will be less economic activity happening within the United States due to the fact that the exports are slowing as much as they are. On the flip side of that, incredibly cheap imports are going to start coming into this country. Incredibly cheap imports. And by those incredibly cheap imports coming into the nation, it's new money that's also separating the rich from the poor. As the luxurious items that start moving in is the reason why we have a separation between the rich and the poor, and that's from the new money coming in. Okay. See, there's no way out of this. People say, man, what's there to fix it? You can't fix it. There's no fixing it. There's a problem here. It's either complete and utter poverty, or we have to deal with the fact that there's going to be inequality that's going to grow worse. It's one of the two. Right? And so I think about that. I think about what it is that the Federal Reserve is attempting to do. They're playing a game that is going to come to an end. They're like, at some point, they're like, man, I can't believe we got this like going. Like somebody even said that in today's comments. They said, man, I can't believe this, or Greenspan said, I can't believe this thing is still continuing, right? Yeah. Right. So this is it, man. Following and understanding the Federal Reserve from their position. Not like this is why I stopped listening to a lot of other economists out there. It's not because they don't have good stuff, right? It's not because they're not like understanding on how to make money. It's not that they don't understand where it is that, that the governments are behaving or how they're acting, the geopolitics. There's so many smart people out there. Like they're super intelligent. They got it all figured out when it comes to that kind of stuff. However, I cannot find anybody, literally cannot find anybody who comes even close to speaking some of the things that I talk about, right? I do not get my information from anybody but the Federal Reserve. Every single document, every single thing I talk about is words being said by the Fed themselves. When it comes to monetary policy, they are the ones speaking it. If somebody has figured it out better than them, on how it is that they are going to conduct themselves, I would like to see it. Right? I mean, they're not lying to each other, although they kind of do. Actually, I shouldn't say that. They kind of do. I've actually seen them kind of lie to each other a bit, and some of their own, there's like they contradict, themselves when they speak to certain groups. And it's kind of funny. I mean, I wish I could pick that out like right now, but I just I just kind of pick that up over time as they do kind of speak. But the overall efforts of what it is that they are attempting to do when they speak on the mainstream media and when they speak to each other is so different. It is just like it's almost like two different the two-faced speaking of it is just unreal. Right? And so most people, they're stuck on this mainstream media view of what it is that the Federal Reserve is doing. They're picking up their strategy from that. They're learning everything they can learn about the Federal Reserve through that mainstream media, and it is like it is pure propaganda. It is such BS. Okay? But when you listen to them, when you listen to the words that they use, right? When you listen to some of the things that they are planning and talking about, when they talk about regulating of stable coins and how the dollar's monetary policy, anything that's backed by the dollar itself, monetary policy transfers right through that. This is interesting. So if stable coins go out there and they build the networks themselves, they do all the things, get all the work, get all the things set up. So like there's an economy built using stable coins. We're sitting back here doing literally nothing but watching it happen. All right. I almost fell out the door. Watching it happen. And then all we have to do is regulate it. All right. So that we actually have some oversight over the whole thing. Didn't really have to do any kind of like effort into creating the economy from it. That just took off all on its own and was done by, the natural economic forces that take place through innovation and entrepreneurship. And then they just go ahead and regulate it, put the monetary policy on the dollar like they normally would, and right into the stable coins. The stable coins are now in use, and nobody even had a second chance to fight it. It's taking place right now. Go fight it. You can't. It's happening. It's like an infestation. It's like you can't stop it, you know? And so as this continues, and I laugh when I see it happen, and I was just like, man, all those people who laughed at me about buying gold and silver and all that other stuff, and I'm thinking, man, you guys are going to wish you had something to be out of that system, and they don't have anything. Like, they're going to have everything tied up into it, and they're going to be like, oh my God, how do I get out of not being a stablecoin? It's like, it's too late. Your retirement, 401k, your Roth IRA, every single stock that you own, you're cashing it out into stable coins. You can't get into cash anymore. And once you're in stable coins, who knows if you're going to be able to buy your gold and silver? Who knows what you're going to be able to do with that money? Right? They've already said they can tax, trace, control, do all the other stuff. Let your imagination run wild. I mean, there's a lot of what ifs, and I personally don't think that's going to take place in our lifetime, because one of the things that has to happen with the currency is there has to be confidence. People have to be confident with it. And if you are committing black market deals with it and not getting in trouble and nobody is saying anything and it works just as good as cash, and you do that for an entire generation of people, I guarantee you nobody's going to think twice about it. Nobody thinks twice about using debit cards or Venmo or PayPal or anything else right now. I mean, how many people actually use cash? And here's something that's really interesting about it to think. I know I'm just kind of going off, but this kind of got me thinking. Japan is like one of those nations that has really low interest rates, went into negative territory. And I think about Japan and how they use cash. They're like a cash is king kind of nation. And they don't really like using the digital transactions as much as they like using folding paper money. Okay? And now that's something to think about. Older generation, one that doesn't like or moved into negative interest rate territory, and they love cash. I mean, this is something to think about. Because the moment that you get out of cash, then you're in a cashless society, you're in a very different world, an economy that is not anything like you have ever experienced. Nothing like anybody has ever experienced. A digital world, one that has you very limited on what it is that you can do. Maybe it has I don't know, I don't even like to dream about it, because like my mind can drag into some really scary, scenarios that could come from it all. But understanding that it's something that is taking place, something that is happening out there, it's best to understand that you can do things that then separate yourself from that situation. People laughed at Bitcoin. People laughed at Bitcoin, saying that thing will never go anywhere, won't do anything, won't go, all that other stuff. I laugh at that. I was thinking, people said, man, it sounds like Bitcoin's a scam. I said, cool, I want two of them. I want two of these scam coins so I can throw them around, figure out how they work, because that's how interested in currencies I am. I never thought that they would go anywhere, and I'm glad I never did buy those two Bitcoins, because that computer crashed a long time ago, and I'll be telling the story about how I lost the Bitcoins. I already lost an Ethereum wallet with some Ethereum in it. See, I've had a crooked exchange steal my coins. I've experienced not heavy blows to it, but I've experienced some, losses through fraud and misplacement and stuff like that. It's something that everybody, I think, should experience. And as I experience it and other people experience it, and some people who really enjoy it start to build the programs and the protocols and the the economy, all the ecosphere for all this stuff, it's going to have a major impact on our lives going into the next 10 years, especially once people grow too accustomed to not using cash at all. They won't have any idea of what it's like to be in a secret private communication. That's really what it is. I mean, you think about it, cash is a private communication, right? And that'll come to an end. All right, I'm kind of going off here. We're like 40 minutes into it, and Simon just hasn't shut up the entire time. So let's go check out this super chat real quick. Low Church Crusader, thank you so much for the $5. What currency would be still around if the U.S. dollar lost world reserve status? I mean, take its place. I mean, what will still be stable? Gold and silver. If the dollar crashes, there's really nothing else that can take its place but gold and silver. We have to understand it from Gresham's law and then again from Thayer's law, right? Because Gresham's law is really easy to understand, right? This is the reason why gold can't ever become a world reserve currency unless the dollar collapses. Then, yes, gold can step in. So once the dollar collapses, it will be gold because there's really nothing else out there that is a good currency beyond that of the dollar. Like, I mean, the dollar is a fiat currency. It's backed by nothing. All the crap, right? All the stuff that you want to say is negative about the dollar. Well, name one currency that isn't like that, right? So you're going to exchange dollars for some other currency? That's the whole point. Like, it's just like that currency is just the same. It's only different. Right? It's not backed by anything. It doesn't have anything going on. The only thing that would ever replace it, if that dollar was to collapse, would be gold. Period. That's it. And people would be in hell to pay kind of situations as the world would be suffering in poverty and misery at the time. And there would be very limited transactions because there's a very limited amount of gold. And nobody would be trusting each other to be lending money out to each other. And so the amount of transactions would be limited to the amount of people who would be willing to relinquish their gold and silver. It's scary ass times. Don't wish upon it. Okay? Now, I don't feel that coming. I don't think that would be the case, but that would be the case if that was the scenario that you're suggesting of a collapsing dollar, is that gold and silver would be the only thing to replace it. Now, let's think about it from another direction, okay? Because Gresham's law is really easy to understand. Bad money chases out good. No matter what you do, you're not going to be able to introduce a good currency because the bad money is going to chase it away. And it's easy to understand how this theory works. Just put a gold coin in one hand and some fiat currency in the other. Put some cash in the other. Now you take that gold coin and you take that cash and you come to me. I'm a merchant. I'm going to sell you this here apple, right? I'm going to sell you this apple. And with that currency, right, one of the two, you got cash or you have gold, you're going to come to me and say, hey, which one of these do you want? And I'm going to say to you, I'll take either one, right? I mean, for this apple, I'll take the gold coin or I'll take cash, whatever, right? Now tell me, are you really, really going to hand me that gold coin? Or are you going to put that gold coin in that pocket and you're going to hand me the cash for the apple? Right? Guess which one just went into commerce? The one that's being used in the economy is the cash. Why? Because it's the bad currency as opposed to the good currency, and that bad currency is being accepted. The good currency gets hoarded away. This will happen no matter what you do. This is Gresham's law. He discovered this through coin clipping. See, this is how ancient this theory is. It goes all the way back to the 1500s. See, he found that coins that were clipped would be in circulation, where unclipped coins would be hoarded away. So back in the day when you had silver coins, the people would clip little tiny bits off of the edges of the coins and then save those little bits of silver for themselves to eventually, I guess, have another coin. But meanwhile, take that coin and go and spend it at face value into the economy. And people were finding that there were no unclipped coins in circulation. All the unclipped coins were carrying a premium to them because they carried more silver content to them. They were the good currency. They get hoarded away. The bad currency, the clipped coins, went into circulation. So again, like, This is going to take place no matter what you do, right? And then even through the idea of legal tender laws, right? Because this is another big argument that kind of goes around the whole Gresham's theory, the Gresham's law theory, in that there's legal tender laws, right? That says you're forced to use this particular currency, right? And you can't use that particular currency over there. So therefore, the good currency, although may get hoarded away, can't be used at all. And therefore, only the bad currency is willing to be accepted. But that is a force upon the natures of slow down. That is a government force upon something that is a naturally economic occurrence. Okay? Like very much like the tariffs that are put on the goods to prevent them from being cheap goods coming into the United States, destroying our manufacturers because we have a high standard of living and we can't produce stuff as cheap as somebody else out there in the world. Right? For the same reasons that we put the tariffs on it, if it wasn't for that economic force that was happening, our high standard of living, our high cost of labor, and everything that goes into the cost of making these products, if they weren't being produced someplace else cheaper, creating the Cantillon effect, then we wouldn't have to hit them up with all these tariffs. Right? The government wouldn't have to be doing any of that stuff because the economic force that would be happening out there would be one that was in a benefit to us, which is being a manufacturer powerhouse, distributing things out there to the world. The only way you can do that is if you have a lower standard of living compared to everybody else who's making the same stuff. That's it. Like, that's all there is to it, you know? Man, I am going off tonight. Happy 4th of July, everybody. I hope you guys have a great time tomorrow. All right. So, again, Thayer's law kicks in when the currency completely collapses, right? So when the dollar is failed, Thayer's law steps in. Good currency is the only thing that is accepted. And then, yeah, you'll find other currencies that will, might step in and start having some trust or gaining some trust. Here's the thing. The United States dollar is providing the world with a safe and liquid asset, the U.S. Treasuries. The very same thing that the Federal Reserve is saying, you can't keep doing this. You can't keep issuing these damn U.S. Treasuries. You're on an unsustainable debt path. Those treasuries are the same thing that the world is in demand of. Believe it or not, even as much as you hear people saying, no, they're dumping out treasuries. You didn't hear, you don't know that they're dumping out treasuries. Give it your meaning you want. I understand the meaning behind it. The fastest way to cash is to sell treasuries. Why would you need cash? To pay your debts, because you have debts that are due in dollars. See, that's the real reason why they're selling treasuries. It's not because they want to get out of treasuries. Treasuries are at a loss right now if you're selling for them. The only reason why you're selling them is because you're trying to get the cash to pay your own debts that are due in dollars. Right? And this is really what's happening out there. All right, 47 minutes into it. I haven't stopped the whole time. Man, look at all these comments. You guys are, okay. Happy 4th of July. So the plan really is for us to have nothing and be happy. I don't know. I mean, you go ahead and give it that meaning. I already don't have anything. Like, what is it that you can possibly take from me that I would be like, okay, well, shit. Like, I don't have anything. And the Explorer, take the Corollas, the Corolla and the S10. It was just like, that's like about the extent of my wealth. I mean, you're going to take my bank account. It was like, it ain't that much money. There ain't nothing you can really take from me. I already have nothing. It was just like, I mean, who cares about it? Like, I don't care. Material possessions, screw it. I have no desire for any of that stuff. So now I'm not in fear of them taking anything from me. My fear of owning nothing doesn't exist. That is not a fear of mine. So therefore, I just have to worry about being happy. And they said I was going to be happy. Great. Perfect. They can go to hell. I don't give a shit about them. Right? I am not scared about the New World Order. Come knock on my door. That does not scare me at all. Not at all. I've dove into so much of that stuff and that information. Bring it on, guys. Like, go ahead and fly a drone into the house and just end it right there. Okay? I mean, I ain't scared about it. I mean, I don't own anything. What am I going to own? Like, I'm going to work 30 years to own this house, and by that time, who cares? Like, I'll never own the house. I get that, right? I mean, I get that part. Even after that, I'll have to pay taxes and all the other stuff that goes with it, all right? It's just an asset that I can use to possibly make me money in the future. I will never own the thing. There is really nothing that I own. This is what's funny about it. I mean, I look at it. It's like, I mean, it's like, the total accumulated like wealth that I have, if you were to pile it all up, it would sit here on the front seat of this car and it wouldn't be that much money. Like you pile it all up, you might get yourself like a really, really nice car, right? And not like fancy car, like just a really nice car, you know. Uh, Love the fact that Simon is back into this doping and coking moves. Benny, it's great. I didn't even see it was you until I read the comment. I knew it was you. How you doing, buddy? All right, not even a self-storage from collection. What can dollar bills do for me? All the skilled folks died. What can dollar bills do for me if all the skilled folks died? Here's something. You know what a dollar bill can do for Federal Reserve note? This is something that a lot of people don't know. Here's a little secret about Federal Reserve notes and having cash as opposed to a bank account. Like literally folding dollars in your hand, cash Federal Reserve notes. They carry the first lien and paramount right to the Federal Reserve's balance sheet should the Federal Reserve go bankrupt. This is a very interesting little clause, whatever, like law written within the Federal Reserve Charter. And you can go and research it for yourself. In fact, I might go and find the information. I've done videos on it way back in the day, so I probably have past videos with the information in it. But the first lien and paramount right, should the Federal Reserve go bankrupt, the only way you can get that, go to their balance sheet and say, hey, I want the gold, I want the SDRs, I want the, whatever it is that you got on there. I mean, not that any of the other SDRs or debt assets would be worth anything, but they do have gold, right? And they do have some other stuff on there that might be worth, going and getting if you could. However, you do need the Federal Reserve notes themselves. Not bank accounts, not, stocks, not any of that stuff. Federal Reserve notes are the first lien and paramount right to the Federal Reserve's balance sheet. So they do carry a premium. They do carry a bit of a significance to them that is unlike anything else that's out there. Nothing else has that, just those notes. So that's kind of important to understand why cash is king. Cash is always has and always will be. There is no way that the Federal Reserve's liabilities of those Federal Reserve notes will not be king so long as the Federal Reserve exists. And this is scary thoughts to think about because most people look at it as something that is going to be hyperinflation and fail and going to be gone and all that other stuff. And the more they think about it that way, the more it benefits the Fed. That's what's scary about it, is that understanding the Federal Reserve and the consequences of it to the levels that most people do when it comes to that hyperinflation awareness is actually a benefit to the Federal Reserve's monetary policy. See, one of the things about this channel that I've always been so adamant about is like, please do not fall for the inflation scenario. Do not fall for this. Watch lumber. Lumber will go back down to normal prices and nobody will know why. All right. And I'll be the one explaining it the entire time. And I was trying to tell people, look at the supply chain breakdown as more of the reason. Because if you don't and you blame it on the Federal Reserve, you will fall right into their trap. And that's exactly what happened. Every single person who said the Federal Reserve screwed up, don't know what they're doing, they're going to cause hyperinflation scenario that is going to run away from them, benefited the Federal Reserve. All right? Every single person who did that. You'll go back and watch any one of my videos. I never talked about that. I never said that the Fed was going to cause a hyperinflation or inflationary scenario that was going to run out of control. And the reason why I didn't is because I knew I would be falling into the exact same trap of spreading the information that would be needed for them to conduct their monetary policy in the appropriate fashion that they felt was needed. And that was a higher inflation expectation. Right? I mean, read this speech. Monetary policy strategies for a low neutral interest rate world. It's by far the most telling thing that you could ever possibly have read, talking about what was going to occur going into the future. It was spelled out. And it was spelled out during a time in which that people were saying there was no inflation. There's no inflation. There hasn't been inflation. The Fed can't produce inflation through all the quantitative easings of 1, 2, 3, and 4, taking a balance sheet from $850 billion to $4.5 trillion, and yet still could not produce the inflationary scenario the Fed was looking for. Right? Why? It's because of the low neutral interest rate. The Fed had run out of monetary policy. They were screwed. They admit it. They admit it right in their statements. They had less scope. That's what they call it, scope. Right? Less scope to deal with a downturn in the economy because they wouldn't be able to reduce their interest rates past the lower bound of zero, and reducing them far enough past the neutral interest rate that would actually stimulate the economy. They were done. They were done, son, right? The whole thing. They were screwed out of it. And they knew that time was coming. And they knew it from so long ago. They knew it from 20 years ago. Ben Bernanke was talking about it. He talked about a speech that laid it all out. Quantitative easing, talking about how they were going to use credible threats, talking about all that stuff. And if all else fails in the quantitative easing and the federal in the credible threats and all the job and all the other stuff doesn't work anymore, what are they going to do? Buy the assets of a foreign nation. Whatever we got to do to keep pumping that money out there, to create the liquidity, to fill the demand for their liabilities. And the only way to do it is by buying an asset. And if the government's on an unsustainable debt path, they need to figure out another thing to buy. And they keep warning and warning and warning. And I cannot find anything else that they are going to buy that's going to be of significance, that is going to be on their balance sheet, that is something that they can buy outside of that foreign sovereign debt. You think about it. If you were to have it in a stable coin fashion, in a digital coin, you could limit the direct, like you could actually buy the debt of a foreign nation and then limit where that money goes. Like you could keep it from even leaving the nation altogether. You could force it into particular directions within that nation. It would be a central banker's wet dream. Like, I mean, my mind spins on the idea of the what ifs. Like, I could just go on forever, on the what ifs. And it's taken place. Like, it's obvious this is what's happening. All the rest of the nations will go digital, then the Federal Reserve stablecoin will. It'll be introduced and everything will be backed by it. It'll be sitting on the Fed's balance sheet, all those little pieces of it. I mean, you can see it happening. It's like, I mean, for a lot of people, they probably don't. But for me, I do, because I can see it through their own statements. I can see it through their words. I can see it through, the communications that they are giving out there talking about all this stuff. All right, let's read some comments here. So many, 242 people with 138 likes. All right, wild to think about the 1960s as a basic job paid $10 a day. That same roll of silver quarters is worth $200 today. Yeah. Well, basic job paid $10 a day, silver I mean, the silver never changes, right? The silver doesn't change. The silver stays the same no matter what. I mean, think about it. Like, how many times back in the day did you hear Grandpa saying about, like, back in my day, you used to buy a gallon of gas for a quarter, right? Well, of course. You can still buy a gallon of gas for a quarter. You just have to have a silver quarter, right? You can still, it still can buy for a quarter. You just have to have the right quarter. Yeah. That's the difference inside of it. Like, the silver doesn't change. That stays the same. Like, I mean, it does change when it comes to the dollar, and there is some fluctuation in, like, maybe some of the goods and services that you can trade it for, but it's pretty stable for the most part. Like, if you take that silver quarter, from now on, if you compare it to a gallon of gas, you'll probably notice that you will always, from now on, forever and ever, be able to buy a gallon of gas with a silver quarter. In fact, you may come into the future in which that silver demand goes up, in which you would be able to buy more gallons of gas than with that silver quarter. Right? I mean, it's all dependent, but yeah, and that's just the thing. Like, I don't look at the dollar as something that should have saved me money. Like, I shouldn't have saved money in dollars. That's not what it was meant to do. It's a currency. And as much as people say like, no, dude, you should be able to save money, and then have it for the future, and that money should have a purchasing power. Yeah, okay, that's great. We should. It doesn't. It doesn't do that. Like, I mean, yeah, we can wish and dream and hope and beg and pray and tell people that it should do that. It doesn't do it. It doesn't do that, and it's not going to do that. And there's no way to think or reason to think for any stretch of the imagination that it's going to retain its purchasing power. It doesn't do it. And so like I don't even share a concept or a consideration of it. To me, it's a currency. That's what it is. It's meant to carry something from my goods and services to other goods and services. That's it. That's the currency of it. And it's meant to facilitate that trade. Outside of that, it's not meant to serve any other purpose, right? Other than facilitating that trade. So you got to take that money as soon as you have goods and services and trading it for other goods and services. If you're not trading it for goods and services, you better be investing it, or you better have a plan. Because if you don't have a plan for it, I guarantee you the universe will take it from you. One way or the other, whether you lose it through purchasing power or you nickel dime it away, or a bill comes up and just says yoink and just takes it from you. But no matter what, it's not a store of value. Don't consider it one. Find other things to store value. Man, it is bright out there. Need to leverage up into assets. That's right, Benny. Work hard and live frugal. Get you to the top of life. Alrighty, guys, this has been a lot of fun. I've babbled on for an entire hour. I can't believe I have just, well, I can. I mean, I just do this all the time, man, right? Every single day I come out here and I just keep going off. But let's go hit that like button. Let's see if we can get a bunch of people up in here. We have 139 likes right now with 243 people watching. Let's get it up to 200 likes in the next, say, 5-10 minutes. We get it up to that, we'll continue on for a little while. But at 140 with 244 people, we shouldn't have any problems having it at 200 likes here in the next 10 minutes. All right. Gabak USA free computer question. If the Fed goes belly up and they close doors, how can we get gold or whatever we get? Will it apply for the whole world? Yeah, I'm gonna say like that's probably not gonna be an outcome. Like, I just can't imagine that being a situation. Like, what are you going to do? Is this like you're going to go to the door with like, hey, I got some Federal Reserve notes. I don't know how that would work, to go to their balance sheet and say, hey, man, I got like, I mean, you got gold out there. I want some gold for my couple dollar bills that I got here. I don't know. Like, I don't know how that's supposed to work. All I have read is that it's first lien and paramount right to the Federal Reserve's balance sheet in case of a bankruptcy. Outside of the logistics of how that works, I couldn't tell you. All right. How is there still sunlight at almost 9 p.m.? It'll be bright out here until 10, even 10:30. It won't be bright, but it'll be light. You can go outside and like see out there in the yard and stuff like that until 10:30. And then it'll probably start getting light again about four in the morning or so. And then like really start getting light about 4:30 or about that. And yeah, because we have very, very little dark here, in the middle of summer. Like, you go up to where all-nighters at, it's sunlight all day long, and it doesn't get dark at all. But yeah, Oregon's pretty cool for that, so especially Northern Oregon anyway. All right, plot twist: deflation is actually the Great Reset. Uh, I don't know, maybe, I guess. I mean, deflation is like, it's like to me, it's like recessions, right? It's like when everything goes on sale. It's like clearing out the bad undergrowth. To me, like, recessions are good things. It's like all the bad malinvestment, the irrational exuberance, that all gets dealt with during recessions, during downturns. Like, that's a good thing. And generally, you're experiencing deflationary scenarios because of it. Uneducated geologist. I love it. Thanks, Simon. Yeah, well, thank you for being here. Then buy gold jewelry. Cars have tripled in value. Yeah, and I mean, you think about it, cheap cars are being produced in the world, right? Especially in China, the cheap EV vehicles. You hear all about it. So, yeah, cars have tripled in value. Yeah, maybe it's because they cost so damn much here to make. Hmm. That's maybe one of the reasons. I mean, how is it that they can build cheap cars someplace else in the world? Right? Because, right? Labor, input cost, everything that goes into it. They have a lesser standard of living than we do. We can't compete. You know? People don't understand the zones. Yeah, that's well. If you don't, if you never really spent time in up in the northern area, then you wouldn't experience like you got to think during the wintertime, it's quite the opposite. It's dark before let's see. I would leave for work when it's dark, and I come home and it's dark. Right. So and then it's quite the opposite now. It's just like he is above the 47th parallel. That's why it's still sunny there. I miss all-nighter hider. Yeah, I do too, Deja Vu. He'll be back. He's out there, he's out there getting the fish, man. How many daylight hours during the winter? Not nearly that many. All right, rare 90s and early 2000 cars. Recessions for how long though? Well, I mean, how long? Like, here's the thing. Like, we're in an economy that never existed before. So when people say like, what should it do? What should it be? That's anybody's guess, right? I mean, this is not something like we should like. The United States has experienced countless recessions. I mean, there's a recession every 7 to 12 years. Like, I mean, in fact, they were supposed to happen even quicker than that. Business cycles were meant to like come in very quickly, every 5, 8 years, whatever, and just constantly clear out this bad undergrowth and allow room for business to happen again. I mean, this would be typical business cycles. But once you have a debt cycle that has taken over, where it's expansions and contractions of debt that is happening, then you have like longer expansions with bigger, deeper recessions that take place. And we experienced this during the great financial crisis, and then we did experience it again during the pandemic. The only problem was is that the pandemic was completely papered over, or the recession was completely papered over by the efforts of the pandemic, right? All the stimulus shutting down, all the crap that happened from it completely disappeared the recession. Like hardly anybody even knows the way we had a recession during the pandemic. It was the shortest, deepest recession in history. Well, these things should be taking place more often, clearing out the bad undergrowth. But the way they keep trying to hold the system together to prevent those outcomes from happening is that you end up with ever increasing amounts of irrational exuberance and malinvestments that are in the system that never really have a chance to clear out until finally one day it just can't hold on anymore. And then boom, we end up crashing. And they know this is going to come. Like they knew the pandemic was going to come. Not the pandemic itself. Like I'm sure a lot of people can say, yeah, oh yeah, they knew that sickness was coming. Okay, that's not the part I'm talking about. They knew the recession from the pandemic era that was coming regardless of the pandemic, right? But everybody said, oh no, the pandemic induced recession. They repeated it over and over and over and over and over again, right? Until everybody believed it. It was pandemic induced recession. It wasn't. It was a recession induced recession. It was a irrational exuberance, malinvestment, clearing out of the bad undergrowth recession like we should have experienced, and instead they had the pandemic instead, and they papered over the top of it. There was no reason. There was going to be no real reason to even bail everybody out during that time. They didn't have anything other than like you think about it, unless they have the financial crisis type thing where financial markets are freezing up, you got war, you got environmental impact of some sort, you got this pandemic, right? Something needed to occur in order for the government to step up and say, okay, hey, we need to throw our efforts at this thing. Otherwise, they were as bad as they're like, we don't know what to do. We certainly couldn't set up a special purpose vehicle without the unusual and exigent circumstances. And without the special purpose vehicle, we certainly wouldn't have been able to put out the credible threat of buying corporate debt. And if we didn't put out the credible threat of buying corporate debt, then we never would have seen those corporations gorging on that incredibly cheap debt during the time of the pandemic, which essentially funded themselves without the Federal Reserve needing to do anything. But none of that would have taken place had it not been for the unusual and exigent circumstances of the pandemic. Right? They needed it. They needed it to bail out the system. It was obvious. Like, how many times did I hear the central bankers coming out? It's like, well, once everybody's vaccinated, we'll be able to open up the economy and everything will be, up and operational again. And I'm thinking, you ain't no doctor. How do you know that? How do you know that once everybody's vaccinated that you're going to be able to open up the economy again? You have no clue. You're completely assuming that. They're a central banker. But yet, it was more about the timing of it. Once we have everybody vaccinated, once we get to that time, we will have severed the supply chain long enough that we can then open up the economy and let things start to roll again. That's really how they should have communicated it, because they're no doctors. They shouldn't be talking about once everybody's vaccinated and feeling better, right? Like they know. They're central bankers. They don't know shit about being medical. Yeah. It's so frustrating, but yet that was it. It was just like, oh, you guys are calling out the timing of it. The timing of the severing of the supply chain. Once everybody is vaccinated, then we'll have unsevered the supply chain and let it go back into working again. Take the masks off. All right. It was so well played. It was so well played. You know? Like, I couldn't believe it. It was just like, I remember reading the speeches from John Williams back then, before the pandemic, and I thought to myself, how are you going to do this, John? You talk about needing inflation, like this speech right here, right? Monetary policy strategies for a neutral interest rate world, right? He's talking about it. I mean, he says it right here. The inherent asymmetry by the lower bound on interest rate, an inflation target central bank could experience inflation that is below target once we consider the average inflation rate over periods when the policy is constrained and those when it is not. With inflation averaging below the target level, inflation expectations will likely slip below the target rate as well. This is exactly what was happening. Think about it. Donald Trump, there's no inflation. The Fed should be printing money. They were lost control. They knew it. They were worried about it. They were like, man, what are we going to do? We can't get the inflation expectations up. He goes on to say it, talking about how this illustrates the problem by saying 80% of the time when the lower bound on interest rates does not constrain policy and the central bank aims for a 2% target on inflation. During these good times, inflation targeting central bank aims to achieve near 2%, but 20% of the time the economy falls into recession that's severe enough that the lower bound constrains policy. Assume that during these periods inflation averages only 1%. So 80% of the time inflation averages 2% and 20% of the time averages 1%. The resulting average rate of inflation is about 1.8%. As a consequence, inflation expectations are likely to become anchored at a long-run average of 1.8% below the desired 2%. Right? This is exactly the experience that they were having. This is how they needed to have inflation expectations to run persistently high. Right? This downward shift in inflation expectation has a second-round effect on real interest rates, the economy, and inflation. When policy is constrained by the effective lower bound, right? Once they hit the lower bound of zero and they can't stimulate the economy anymore, the downward shift in inflation expectation raises the real interest rates, further diminishing the degree of monetary stimulus, making the downturn worse and reducing inflation even more. You hear this? This is a problem. It's keeping reducing inflation even more. Oh, shit, now what? Even in times when policy is not constrained, the expectations of below target inflation in the future affects current decision, putting additional downward pressure on inflation. Man, even more downward pressure on inflation. What are we going to do, John? Oh no. All right? In other words, monetary policy is always swimming upstream, fighting a current of too low inflation expectation that interferes with achieving the target inflation rate. Man, what are you going to do, John? You better figure out a way. You're going to have to figure out a way to get the inflation expectations to be elevated or something, man. You got to get your monetary policy back. You're losing it. Right? He's talking all about it. Again, monetary policy strategies for a low neutral interest rate world. John Williams, New York Fed president, talking about the policy. He says, hey, I got an idea. He says we have an option of average inflation targeting, whereby the central bank purposefully aims to achieve an above target inflation rate in good times when the lower bound is not constrained. Properly designed and implemented, such an overshoot can offset the inflation undershoot during bad times, so that the long run average inflation rate and the inflation expectations are in line with the target. Oh, John, you're going to keep inflation elevated for an unusually high amount of time to make up for the past shortfalls? How do you plan on getting the inflation, John? It's 2018 when you did this speech and you had trouble finding inflation, even though you just went through quantitative easing that took the balance sheet from $850 billion to $4.5 trillion plus. And yet you seem to think that you can find an inflationary scenario where you can let it run above average 2% for a period of time. How do you plan on doing that? I mean, I just don't get it. Pandemic. Wow, was that not well timed? Totally saved you. Totally saved you guys. And it's like, once I saw this, once I could see it, I was like, please don't fall for this, man. You're gonna totally benefit the Federal Reserve. If you want to end the Fed, if you want to fight the Fed, then you don't fall for the inflationary expectations. That is getting their ammo back. It's giving their monetary policy back. I don't know how else to describe this stuff, man. Like I can't see it any other way. Like all these people are out there, oh, the Federal Reserve will just print it up and just, whatever. And I'm like, how do they plan on doing that? How do you think they plan on doing that? Yeah. All right, we got 187 likes. Let me read this super chat right here. We got Low Church 210. Thank you so much. Is it bad? I want the Fed to get its ammo back. No, actually, I don't think that's bad. I don't think that's a bad thing because honestly, I'm willing to take the hit. Like I'd be willing to just like, hey man, I'll suffer in misery and poverty, but I got kids, and I don't want to see them suffer in misery and poverty. And what we have going on in this nation, comparatively to what other nations have to go through, considering that all we have to do is really just create a bunch of debt issuance. Now, this is an unsustainable debt path, and I hope that we don't experience misery and poverty from it. But ultimately, that's what would end up taking place if we do not have the system continue on the way we are. Like, I am not an advocate for this, but I'm certainly not an advocate for living in poverty and misery either. And now I am thinking and hoping and preparing in my best that I can, and at least that I feel I can, for the moment in which that the dollar doesn't exist as a world reserve currency or even as a currency in general. That is not a scenario that I like to think a lot about. But I have tried to prepare myself for such situations as best I can. I don't even know if I'm prepared for it. Like, I doubt I am. Now, is that the reality of the situation? Is there a collapse of the situation taking place right now? No. What we have is a continuation of the situation. So as long as we have this continuation, then we're going to have to participate in a way that is going to be best for us. And for a lot of people, it might be, no, I'm going to sit here and with my rifle and my gold, and I'm going to be out in the middle of a farmland, and I'll be able to see anybody who comes within 20 miles, and I'm going to be here safe and with this idea. That's cool, man. I'm not there. I'm not doing that, right? But other people might feel very comfortable doing something like that. I see it much differently. I'm looking around. I waited. I saw. I lived like a Luddite. I'm not going to do it anymore. I want to participate in the system in the sense that I want to elevate myself into a higher level. And you're not going to be able to do that by sitting around waiting for something to happen, right? That's just all there is to it. All right, 192. We're getting close. A constitution of the same boot that is upon our neck. New Mexico has tons of potash. Really, truly it does. Debt-based economy got all humanity is existing in relative poverty. Yeah, well... yeah. There's a huge separation that takes place. But I mean, you got to understand, like, throughout history, if you were to go and read it, like, I mean, just go and read any kind of real, like, any kind of length of history, the common man was ultimately a slave, right? And now, I don't like to think of myself as a slave, but we're modern day slaves. If you were a common, everyday, just regular Joe living 9 to 5, you are the equivalent of a modern day slave. Now, you happen to live in a very nice slavery kingdom, all right, as far as being in the United States, but generally speaking, that's what you are, right? Because throughout history, there's been kings and there's been slaves. And that really comes down to property owners and everybody else. That's really how, like, I don't, and then if you think about it, really capitalist. So you have capitalists who invest into the system, the people who have all the, investments out there, the dividend paying stocks, the bonds, the rental properties, all the stuff that's going on out there. That's the capitalist out there. The property owners, same thing, right? They got the rental incomes, they got the farmlands, they got the whatever, the commercial, use, whatever it is. Right? Property owners, capitalists, slaves. That's all there is. Which one are you? I mean, if you're not a property owner and you're not a capitalist, then sorry to tell you. Right? That's what you are. Now, most of us, even still, like, trying to, like, I feel like even acquiring this house, no. Like, I have to slave away to come up with the payments and all that other stuff. Now, if this house was being rented out, then I might feel a little differently about it. But no, I'm a slave just as much as anybody else would be out there if they had a rental apartment, if they were renting an apartment or something. It's the same, right? I have to show up every day for work. If I don't do that, then I don't get this. That's slave. And that's how most people are. I mean, everybody is, right? Handful of people aren't. And it's to understand this is modern day slavery and what it looks like. Okay, let's see here. Adam Smith wrote that it's not because of the benevolence of the butcher, brewer, or baker you have food. Is there regard for their own self-interest? That's right. See, this is the thing. Like, nobody does anything for your benefit. It's for their benefit, right? Like, I got good at talking economics, so I come out here and I share all this information and my ideas and theories and discussions, and we have this, you guys have discussions in the chat, and this is like, what I do. Like, if I was to show my talent when it comes to being a butcher or something like that, then it would be much different in the way that it would look, right? Now, ultimately, my self-interest when I started this was to learn. That's why I was doing this. Now, as time went on, I started making money at it too. So then it became, well, hell, if I can make money at it, let's see how much more I can do, how much more I can learn, see how far I can take this and see what it does, right? And this is what I ended up doing, but it was for my own interest about learning and trying to grow some of the things that I had going on in my life. Sharing this information and just giving it out there has been some of the most rewarding experiences of my entire life, much more than I had ever anticipated it ever doing. Something that I didn't even think would happen, especially when it came to people who are coming up and saying, dude, your videos changed my life. Whoa, man, I was just trying to share some of my opinions. Wasn't trying to change your life or anything. And they're like, no, you don't understand, man. It's like literally changed the way that I am doing things. I quit drinking, I'm investing, I'm starting businesses, I'm doing all kinds of stuff. And I'm like, dang, man, I I want to follow you, dude. It sounds like you were ambitious, like, I mean, all of a sudden they're like thanking me and I'm looking at them going, man, I'm like excited about what you got going on. This is the symbiotic relationship that ended up happening from this that I was not expecting. Right now, again, if it wasn't for my own self-interest to start it, I don't think that all this would have ended up happening. And I certainly wasn't greedy in the fashion that I was going to go for sponsorships and try and make as much money as I can. In fact, I go away from that because I don't like the way it makes me feel. Right? Because truly, I love doing this. This is fun. right? This is exciting for me to realize that I have something that I can contribute to the world, and there actually have something that is taken from it that is useful. You know how awesome that is? Like, holy moly. Like, I mean, who cares about the money part of it? Right? You know, that, yeah, okay, cool, man. But that, man. Uh, where are we at? Hour 24, 203. Socialism and communism sucks. Why I don't vote for it? Yeah, I wouldn't vote for it either. Don't talk about the real problem and you'll keep the Don't talk about the real problem and you'll keep that income, Simon. All right. Everyone needs a shot of courage every now and then. You know, and that's just the thing. I'm going to just kind of end it right here because I think like we're getting kind of late into this and it's kind of time. But anything that I have found, like as I was going through this experience of building this YouTube channel and kind of getting myself out of debt and, trying to acquire some of the better things that, some of the better, higher standards of living in life, just having a normal standard of living in life, really. But, you know, trying to acquire these things, it wasn't easy, but I think probably the biggest challenge that I overcame was to just like anytime that I ever felt fear about doing something was the moment that I would step into it. I would be like, okay, I'm scared. Nice, let's do it. Right. And if I didn't think I could do it, or if I was nervous, or, just whatever, it would be like, okay, so if I'm feeling that way about it, then I'm going to start moving towards that thing, no matter what it is. Right? And so I found the more that I took on this feeling of just leaning in towards tension, right? Like if I felt the tension towards it, I would move towards it. It would be like, okay, I mean, it was just like, man, here, you want to get invited to go speak on stage at the Rebel Capitalist? Yeah, I want to go do that. Oh, no, yeah, I want to do that. Are you kidding me? I mean, so here, first time, you're going to go speak on stage in front of 800 people who paid, damn near $1,000 to get in to go see this. You're going to be speaking on the same stage as Ron Paul and Robert Kiyosaki and Jason Hartman and Ken McElroy and all the other, awesome dudes out there. And I'm just the uneducated economist, and I've never done this before. Ever. Like, done anything like this. Yeah, I'm going to do it. And I was scared. And I had no clue of what that was going to look like or be like or whatever. But the magic that came from it was unreal. Right? Like, every time that I had ever done that, where I leaned into something that was fearful, that I didn't know if I could do it, that if didn't think I was qualified or was smart, whatever, it didn't matter. Like, whatever it was, the results that came from that was a magical experience. So I encourage everybody to do that. Like, if you're fearing something, the fear of the unknown is where the magic is found. That's where it's at. That's where you go find it. Okay? Like, it's literally, people are like, man, I wish something magical would happen for me. Well, you gotta be doing something that's fearful. You gotta be in fear, or else you're not gonna find that magical experience. That's what's crazy about it. Because once you have lived it and you know it and you're not scared of it anymore, then it isn't magical anymore. It's just normal. And that's just the way it is. You don't think about it being anything else. So that's how you do it. It was like, and I don't know how else to explain it other than that. Lean into the tension, lean into fear. Magic is found in the unknown, and you're going to find it there. Because it isn't found someplace I mean, if you already know, like I know everything that's in, I got a computer and I got my theory, I got my theory here. I got a notepad. I got some glasses. I got an apple. I know all this stuff, right? I don't know what it's like to be in a Camaro, right? Fear of the unknown. See, I should get the Camaro. Probably change my life. All right, go for it. A little uncomfortable is great for growth. That's it. Fear is prison will get you money stolen. Fear in prison will get your money stolen. Oh. Yeah, I hope not to go to prison. Now we are all slaves, and the master cannot maintain all of us. Yeah, I can agree to that. You got to have that fear to experience something magical. That's that's effing metal, Simon. Yeah, you have to. You're not. Otherwise, it's not going to be there, right? Like, I mean, if you don't have that fear, then it's not going to be magical experience. It's just going to be something that you already experienced, or at least you expect, and it's not going to be like, oh, it's just going to be like, you know. And so, yeah, everything, like whatever it is out there, start the YouTube channel, start the business, go talk to the girl, go talk to the guy, I mean, what did you ever pick up the worldly philosopher? No, I didn't, and I should. I actually I will do that for my next. I've been listening to audiobooks while I mow the lawn and stuff, so I will pick that one out for an audio listen, which is actually isn't too bad. There's a few of them, like some books I just couldn't do. Like I tried, and I just my mind would wander off on them. But other books, I mean, they seem to be all right. Yeah. All right, I have to agree. There are spreading themselves too thin, messing with the people like me. All right. People give scammers their money daily in the prison. I bet. I'm a pure blood. Then ever got me. Democrats, please get another booster. I think you'll really enjoy it. Well, thank you, Daniel. Yeah, I'll try and take some time to get that one done. Education is key to success. Yeah, I can totally believe that. I loved it for my history of economic thought class. Very cool, man. Politicians don't pay taxes. I never got a flu shot. Yeah, I, to be honest, I don't remember getting a flu shot. I remember the last time. Okay, I remember having a conversation with my parents when I was about 15, and they said, "We're going down to get the flu shot." And I said, "I don't want it." And they said, "Well, we're all going to get one." And I said, "Well, I don't. I don't want it." And I couldn't I I don't remember exactly what it was that was triggering me at the time, but I was just like those things, like I think I remember them making me sick or whatever. I was just like I'm not into it. And my parents would get them and they would get sick, right? And I even told them, I said, "Listen, you guys get the shot and then you get sick. That's why I don't do it." Right? And that was when I was like 15. I have never gotten a flu shot. Not since I don't even remember getting them before that. Like, I just remember I remember being like about that age and like, the family was going down there for like a family trip to go down there and do it. My brother, and I'm like, not me, I'm staying. Right. um, okay. Australia politicians got a 3% pay raise. What a joke. I just bought a copy of The Worldly Philosopher. I'm starting to read it now. Right on. Oh, that's my mom. Hey, mom, right on. Well, cool. When you're done, then loan me the book. Everybody say hi to mom. All right. U.S. likes a tall man, Trump, 6'3". All right. Flu shot always sickened me. Thanks for being, and not mom. Mom wasn't. I was talking about dad and my stepmom. Mom never forced me down or asked me to do flu shot. Do you think the housing inventory problem will continue? Yep. Only had vaccine when I was born, never had since. I guess what have never been sick. Yeah, I mean, I've been sick, but not that much, not as much as like other people I see get sick. I'm glad you're reading it. It is an excellent read and goes into the life and times of various economists. Oh, perfect. Yeah. No. Yeah. No, stepmom. Yeah, I had a stepmother who was in the medical field, and she believed very much in them flu shot vaccinations and stuff. And so, yeah, dad and I remember that. Ugh, I wouldn't do it. Hi, Harrison. All right. What time is it, guys? I think we should call it quits. It was a lot of fun hanging out, kind of breaking some of this stuff down. I went off for like an entire hour. That was crazy. But, I don't know how to break this stuff down any further. I mean, I just got to keep going over and over again because there's so many parts and pieces. It's so complicated, and then like it's not well discussed. And so when I feel like I'm the only one who's really having any kind of conversation out here on YouTube about it, and nobody else is picking up the theory, I have to get through I have to break through all the misinformation and propaganda and everything else to try and expose this information and what I feel is truly the truth of it. It's very difficult. Like, it's I mean, I'm glad you guys are here and I'm glad you guys are sticking with me as I break this stuff down and get it out. But it's like it's not easy, but it is a lot of fun, that's for sure. All right, guys, thank you very much for being here. We're going to call it quits. That's okay, Simon, and we appreciate what you're doing. Thank you. Yeah, you guys are awesome. But thank you for being here. I kind of stretched it out there a little bit longer. You guys have a wonderful evening. Have a wonderful 4th of July. Everybody stay safe. Have a good time out there. And, yeah, let's just keep breaking this stuff down, right? Uneducated Economist, you let me know.